When Warren Buffett talks, the markets move, and he seems to have changed his tune on investing in airlines. He said back in 2013 that they're a death trap for investors, but it now seems like he's snapping them up. So what does this actually mean for this embattled industry? Well, Russ Mould from AJ Bell is here with me now for more analysis. Well, finally, some good news for these airlines. Goodness.
Well, yeah, Buffett, as you say, in the past, he has invested in airlines before. I think it was in the US there about 10 or 15 years ago, and he lost a packet, which is why he then came up with that comment later that they're a death trap. And the reasons he never liked them previously was very limited pricing power, very limited brand loyalty. Those are the things that he's always looked for in stocks. So it's fascinating that he's now changed his mind. And I guess he's arguing, and we'll see whether he's right, that the airlines have learned from past lessons and that they're now being much more disciplined with capacity additions. We'll see. We
will indeed see. But, I mean, he's investing, he's buying up the US airlines,
yes.
OK? What about the UK ones? Because we did have some numbers coming out from EasyJet this week. Does it have any reaction over here?
I mean, in the end, Buffett is also a value guy. You know, he likes picking up things, you know, where he likes picking up whether it's stocks or socks. I like good merchandise that's marked down. And the stocks have been, the share prices have been hammered. And it's the same for the ones quoted here in the UK or in Europe. So, you know, to be fair, Ryanair's rallied quite a lot recently. But, you know, EasyJet has come down, you know, 30, 40, 50% this year. And analysts have got quite bearish on the stock. There's about 5 buyers, 15 holders and 3 or 4 sellers. So sentiment towards the stock is quite depressed. The numbers you were alluding to yesterday, well, they weren't very pretty. Revenue was down 1%, profits down 28%, and the dividend was down as well. But the stock didn't go down. It was flat to slightly up, which, given the share price fall, the bearish analyst community, bit of a contrarian indicator, and the fact the numbers were bad and they didn't move, might lead you to think, at least in the short term, a lot of grief is already priced into the stock.
OK, so do you think the worst is over then for the airlines? Because they have had a terrible time.
I mean, if you look at the things that have gone wrong, terrorist attacks, we can't promise, but fingers crossed. French air traffic control, weather, the pound, oil. I mean, there are lots and lots of moving parts there. The oil price, probably where it is now, isn't the end of the world for them. They wouldn't want to see it rocket, but fuel as a percentage of operating costs is coming down, so that's definitely helpful for them right now. So some of the things that have gone wrong, you can see fixing themselves very quickly. That said, Caroline McCall, EasyJet CEO, was then talking about a fairly aggressive capital expenditure programme, increasing capacity, as she argues that some of the national carriers who are struggling start to wither away. So you've still got this Darwinian struggle between the up-and-coming, more price-sensitive discount airlines and the national carriers. That battle is still continuing. But if the economy picks up, oil behaves itself, there's no more problems geopolitically, you can see how it could better. Personally, I would still see them as a trade rather than a stock to own, if you believe in those themes, because I'm not convinced, unlike Mr. Buffett, I must say, that they've totally changed their spots. OK,
Russ Mould, we'll leave it there. Thank you very much indeed, talking to us from AJ Bell today. So it seems like those airline stocks are still very much up in the air.